Live from New Delhi, you're watching DD India News Hour, India's voice to the world. I'm Abhishek Mahajan. Coming up in the next hour, Finance Minister Nirmala Sitharaman tables Economic Survey 25-26 in Parliament. Survey projects India's real GDP growth as 6.8% to 7.2% for financial year 2027. India to retain its position as the fastest growing major economy. Economic Survey underlines India's economic resilience despite global headwinds, says India relatively better off than most other countries due to strong macro fundamentals. Donald Trump warns Iran that time is running out for a nuclear deal as US military presence increases. Tehran says it's open to talks but threatens a strong response to any attack. And to mark the culmination of India's 77th Republic Day celebrations, the beating retreat ceremony to take place this evening in New Delhi. All right, India's Finance Minister Nirmala Sitharaman presented the Economic Survey 2025-26 in the Parliament on Thursday. The Economic Survey is an annual document presented by the government ahead of the Union budget to review the state of the country's economy.
Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions. Economic Survey 25-26, Economic Survey 25-26 Statistical Appendix.
The Economic Survey projected the GDP growth in the range of 6.8 to 7.2% in 26-27, while the potential growth for India is estimated at around 7%. Now, the survey reaffirms India's status as the fastest growing major economy for the fourth consecutive year. The survey points out that the domestic demand continues to underpin economic growth in financial year 26. The survey highlights that agriculture and allied services are estimated to grow by 3.1% in financial year 2026. Agricultural activity in first half of 26 was supported by a favorable monsoon. The economic survey mentions that the industrial sector is showing signs of strength, with manufacturing growing by 8.4% in the first half of financial year 26. Surpassing the financial year 26 estimate of 7%. The economic survey highlights that on the supply side, services remain the main driver of growth. The economic survey mentions demand-led growth in the economy has unfolded alongside a marked easing of inflation, which has improved real purchasing power and supported consumption. And the first quarter of the 21st century has gone by. This is the beginning of the next quarter. And to attain the goal of Viksit Bharat 2047, that is developed India, the important phase of these 25 years has begun. So India is relatively better off than most other countries due to its strong macroeconomic fundamentals. But this does not guarantee insulation. The country benefits from a large domestic market, a less financialized growth model, strong foreign exchange reserves, and a credible degree of strategic autonomy. And these features provide buffers in an environment where financial volatility is imminent and geopolitical uncertainty is permanent. At the same time, global scenarios pose a common risk for India, disruption of capital flows and the consequent impact on the rupee. Only the degree and the duration will vary. In a world of geopolitical turbulence, this may not be confined to a year but could be a more enduring feature. In response, India needs to generate sufficient investor interest and export earnings in foreign currency to cover its rising import bill, as regardless of the success of indigenization efforts, rising imports will invariably accompany rising incomes. And this has been the historical global experience. All right, to talk more on this, we are joined by DD India's Mark Lin. He has been closely following this. Hi, Mark. A GDP growth range of 6.8 to to 7.2% is encouraging. Biggest takeaway of the economic survey, what are the indications?
Well, the economic survey also puts into context the global turbulence and what's happening around the world. And despite India's strong economic fundamentals, the fact that India, needs to be wary of the surroundings. He looks at various scenarios, whether it can be business as usual as in 2025, but with more caution because the disruptions are likely to increase, or, whether the economy needs a little more, basically government policy interference or basically intervention. But when we look at, some of the aspects that he's talked about, he has basically differentiated between what is called economic statecraft and economic policy. Economic statecraft is what has led to decisions that are being taken in the global scenario, which are affecting foreign policy outcomes for respective governments. India, despite you did mention the economic survey talks about India's strategic autonomy, India is in a position to take its own decisions. It is not, beholden to anybody as a result of that. But India is following the policy of economic policy. Policy reforms are bringing in, the kind of investment climate and developing on the Indian market the potential for India's demand-driven growth to increase. He does also mention that India is actually punching below its weight in terms of potential. He mentions that it is at minus 4.0, which is a negative assessment of India's potential. That means India has a lot more that it can offer in terms of its economic heft. It is punching below its weight. He also mentions that the rupee has underperformed, and that is an area that maybe we need to look at in the current financial year.
Also, Mark, we've been regularly talking about Viksit Bharat 2047, and how optimistic is the survey about India's manufacturing push and also Make in India goals?
Well, the manufacturing growth has, though it has picked up, industrial and manufacturing growth, India is clearly, the heavy lifting is what he said is being done by services in terms of the overall growth story of India. And this would need to be more balanced, hence manufacturing growth would need to increase. And investments in that direction would see to that. But he pointed out that, much of India's growth is basically driven by services. It's a services-led economy. That's not a bad thing. That is the way the world is moving. And also, we did look at the overall scenario, and, the global economy has performed better than expected despite the economic statecraft of the United States and China and other countries that are involved with trade wars. But the issue is that because of AI and the emergence of AI, and there's a lot of investment of big corporations into AI, we do not know the future. This is something that is at early stage of development. In fact, it was even highlighted last year. So this is an area where, some countries have put in a lot of money that has led to sort of short-term gains and growth, which we need to assess over a period of time. The semiconductor industry, all these are sectors which will be driving growth in the future. And India, of course, has taken strides in that direction. So India is prepared to participate in this market and this sector.
Also, Mark, you spoke about global uncertainty, which continues, conflicts, slowing economies, tight monetary policy also. How insulated does the survey claim India is from global shocks?
So India is definitely not totally insulated, but India has strategic autonomy. That's the way India is insulated. India chooses its own path. India is not dependent in a sense because of the policies of one particular country trying to impose its will on another. So India, with its strategic autonomy, has chosen this path where it is taking the path of free trade agreements with various countries and negotiating them. There is the India-EU FTA, which is mentioned. Of course, that has been signed, but it has to be ratified and it takes some time to come into force. But it is, in a sense, provides a framework for manufacturing in Europe to get a leg up, as well as manufacturing in India to improve as a result of standards improvement and competition and all that. And so that economies can improve, economies of scale can improve as a result of better investments, better technologies being used, and an upgradation, in a sense, of the market. So that is one aspect in which one can see a particular direction of India's strategic autonomy. India is not insulated because India is participating in global trade, and hence it's going to be affected by all the turbulence. But it's the method with which India adopts. India is taking policy decisions to strengthen its economy as a result of these things, and India has benefited from global institutions actually recognizing India's efforts in terms of our global credit ratings improving, and also various FDI policies that are likely to help India in the future.
All right, Mark, stay with us. We are also joined by senior economist Prasenjit K. Basu. Welcome, sir. Appreciate you giving us your precious time. The economic survey strikes a balance between optimism and caution. Biggest highlights and also the biggest takeaway.
Well, I think the main highlight is the fact that India stands out in the global economy for its macroeconomic stability. Inflation is at a 15-year low. Growth is easily the strongest of any economy in the world. If you look among the G20 economies, nobody else is growing even 6%. And we make the mistake of saying that our growth is kind of at 6.5% when it's actually 8.2%. In the latest 4.5 years, average real GDP growth has been 8.2%. I think in the current fiscal year, we're going to get 8.5% growth. We don't have data for the second half, but the first half growth was 8%, and that was before the GST reforms. The GST reforms have provided a significant boost to private consumption spending. Investment spending is benefiting from the cuts in interest rates that have occurred since February last year. And so that, coupled with the fact that the income tax rates were cut in last year's budget for the current fiscal year, means that there's tremendous momentum in domestic demand, particularly private consumption, which is offsetting some of the uncertainty on the external front. Now, of course, there's been unusual uncertainty and a significant setback in relations between India and the US. But we have used that opportunity to reform and build stronger relationships with a number of other important trading partners, the most significant of which was signed just this week with the European Union, the FTA with the European Union. But earlier, of course, the UK, which left the European Union a few years back, had signed up with us last year and sort of set the trend. And then we had the European Free Trade Area, which we signed at the beginning of October last year, Oman, New Zealand, the UAE, Australia. So we've got a number of important trading partners with whom we have enhanced our trading relationship to offset the clear setback from the deterioration in ties with the US. Now, the important thing, though, is that inflation is at a 15-year low. As a result, the RBI is almost obliged to cut interest rates and has done so quite appropriately over the past 12 months. So, and not only has that happened, but inflation even now, as of December, is 1.3%. I think in January it'll be around 1.5 or 1.6%. And in the current quarter, inflation is likely to be averaging only about 2%. The RBI was looking at 2.9. I think it's only likely to be around 2%. And so there is scope for further rate cuts. I think we get another 50 basis points by June of rate cuts. That will provide an extra leg up to growth in FY27. I think it is fatuous to come up with a forecast of 6.8 to 7.2% for next year. We should get used to the idea that 8% is the new base. The new baseline for growth in India is 8%. Pre-COVID, we had, average annual growth in the first 5 years of the Modi government was 7.4% in real terms. And then we had a significant COVID setback. Post-COVID, growth is 8.2. And what is helping here is that we have a number of incentives for the manufacturing sector. And manufacturing is benefiting. But we must realize that 53% of GDP is services. And services growth has averaged 8.6% over the last 27 years. Average annual growth in services is 8.6% over the last 27 years. This year, we're looking at about a little over 9% growth in services. So if half the economy is growing 9%, and the rest of the economy is doing reasonably well, growing about around 7%, you get 8% growth. So we should get used to the idea that 8% is the new baseline for growth in India. If we manage to sign an FTA with the US at some point, then we'll get an extra leg up. We could get to nearly 10% growth. But 8% is the new benchmark. And I think that is what should underline our fiscal forecasts, our forecasts for tax revenue growth in particular, need to take into account the fact that we're likely to grow 8% in real terms. Even in a year when inflation is low, we'll have about 10% nominal GDP growth. So 10% is more than adequate for continued strength in tax revenue.
Yes, Mr. Basu, and to add to that, the IMF projected global growth at 3.3% in 2026, while India is projected at around 7%. We'll talk about that, but thank you for your insights, Mr. Basu, and Mark. Thank you for your inputs. Mr. Anant Nageshwaran will address a press briefing around 2:30 to explain the key economic trends. We'll come back again to this topic, but thank you for the time being. All right, still to come on this edition of DD India News Hour. Prime Minister Narendra Modi addresses media before the start of the budget session of 2026 at the Parliament premises today.
The land of forests, nature's hidden jewel. Jharkhand is a traveler's paradise. Welcome to Delhi.
Welcome back. You're watching DD India News Hour. I'm Abhishek Mahajan. Some more stories. Prime Minister Narendra Modi addressed the media before the start of the budget session of 2026 at the Parliament premises today. Speaking ahead of the day's proceedings, PM Modi said there is a broad consensus on government's focus on last mile delivery.
टीकाकार रहते हैं साथी, हमारे प्रति पसंद नापसंद का रवैया रहता है और लोकतंत्र में बहुत स्वाभाविक है। लेकिन एक बात हर कोई कहता है कि सरकार ने लास्ट माइल डिलीवरी पर बल दिया है। योजना फाइलों तक नहीं, लाइव तक पहुंचाने का प्रयास रहता है और यही हमारी जो परंपरा है उसको हम आने वाले दिनों में रिफॉर्म एक्सप्रेस में नेक्स्ट जनरेशन रिफॉर्म के साथ आगे बढ़ाने हैं।
Prime Minister remarks that President Draupadi Murmu's address was an expression of confidence of 140 crore citizens, an account of their hard work and a precise reflection of the aspirations of the youth. He highlighted that the President placed before all members of Parliament several guiding points at the very beginning of the session and of the year 2026.
140 करोड़ देशवासी और उसमें भी ज्यादातर युवा उनके एस्पिरेशंस को रेखांकित करने का बहुत ही सटीक उद्बोधन सभी सांसदों के लिए कई मार्गदर्शक बातें भी कल आदरणीय राष्ट्रपति जी ने सदन में सबके सामने रखी है। सत्र के प्रारंभ में ही और 2026 के प्रारंभ में ही आदरणीय राष्ट्रपति जी ने सांसदों से जो अपेक्षाएं व्यक्त की हैं, उन्होंने बहुत ही सरल शब्दों में राष्ट्र के मुखिया के रूप में जो भावनाएं व्यक्त की हैं, मुझे पूरा विश्वास है कि सभी माननीय सांसदों ने उसको गंभीरता से लिया ही होगा।
Lauding the free trade agreements, Prime Minister Modi said that the agreement with 27 countries will open up major opportunities for India's fishermen, farmers, youth and service sector professionals seeking global exposure. He added that the move is a significant step towards building a confident, competitive and productive India.
27 देशों के साथ हुआ ये समझौता हमारे देश के मछुआरे, हमारे देश के किसान, हमारे देश के युवान, सर्विस सेक्टर में जो लोग विश्व में अलग अलग जगह पे जाने के उत्सुक हैं, उनके लिए बहुत बड़े अवसर लेकर के आ रहा है। और मुझे पक्का विश्वास है एक प्रकार से कॉन्फिडेंट, कॉम्पिटिटिव और प्रोडक्टिव भारत की दिशा में ये बहुत बड़ा कदम है।
As India advances towards its Viksit Bharat vision, the Union Budget 2026-27 is poised to sustain and strengthen investments in education and healthcare, the bedrock of human capital, inclusive growth and long-term national prosperity. Antara Sinha gets you more in this special report.
The Government of India's upcoming Union Budget 2026-27 scheduled to be presented by Finance Minister Nirmala Sitharaman on 1st February 2026 is poised to sustain and potentially amplify investments in education and healthcare, core pillars of human capital development, inclusive progress, and the long-term vision of a Viksit Bharat. In education, the momentum from the Union Budget 2025-26, where the Ministry of Education secured a historic allocation, sets a strong foundation. The Department of School Education and Literacy received its highest ever allocation to advance universal access and quality. Expectations center on continued emphasis on the National Education Policy 2020 through the expansion of initiatives such as Atal Tinkering Labs in government schools over the medium term to nurture innovation and STEM proficiency, accelerating the extension of broadband connectivity to government secondary schools and primary health centers through an expanded BharatNet rollout for enhanced digital access. Rollout of the Bharatiya Bhasha Pustak scheme to deliver digital textbooks in Indian languages for school and higher education, and strengthening the scope and funding of the Center of Excellence in Artificial Intelligence for Education. Further anticipated priorities include capacity augmentation across IITs and the creation of multiple national centers of excellence for skilling aligned with global partnerships and enhanced support for research fellowships and the preservation of Indian knowledge systems aimed at equipping youth for a dynamic, technology-led economy. In healthcare, building on the Union Budget 2025-26 allocation to the Ministry of Health and Family Welfare, the focus is expected to intensify toward the National Health Policy target of elevating public health spending. Key schemes likely to see sustained momentum include the National Health Mission for bolstering primary and secondary care, expanding Ayushman Bharat Pradhan Mantri Jan Arogya Yojana, and accelerating medical education with additions toward the 5-year goal of 75,000 seats. Complementary efforts under Pradhan Mantri Ayushman Bharat Health Infrastructure Mission are anticipated to advance critical care infrastructure, Ayushman Arogya Mandir Health and Wellness Centers, disease surveillance, rural-urban facility upgrades, daycare cancer centers in district hospitals, broadband connectivity to primary health centers, and preventive digital health integration to minimize out-of-pocket expenses and broaden equitable access.
The government continues to place education and healthcare at the very heart of its very vision of a developed India. These critical sectors remain central to empowering each and every citizen from every walk of life. With a decisive investment in its people, the budget aims to secure quality education, accessible healthcare, and inclusive prosperity, paving a clearer path to a Viksit Bharat. With camera person Vinay Kumar Tiwari, this is Antara Sinha for DD India.
And as India prepares to present its union budget on February 1st, fiscal discipline remains firmly in focus. The government continues on a path of fiscal consolidation, balancing deficit reduction with higher capital spending to support long-term economic growth.
World's attention is turning towards India as it presents its union budget on February 1st. Under the leadership of Prime Minister Narendra Modi, fiscal discipline remains central to the budget, balancing deficit reduction with investments that strengthen economic development. Fiscal deficit is the gap between the government's total expenditure and revenue generated in a financial year. Even as capital spending has risen steadily over the past decade, the government has strengthened revenues to keep the deficit under control. For the financial year 2025-26, the government targeted a fiscal deficit of 4.4% of GDP. Over the past few years, India has followed a steady path of fiscal consolidation, bringing the deficit down from above 6.7% of GDP in 2021-22 to more sustainable levels currently.
I had committed to staying the course for fiscal consolidation. Our endeavour will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP.
To bridge the fiscal gap, the government borrows primarily from market securities, small savings, instruments, short-term treasury bills, and state provident funds. Most borrowings are long-term in nature, helping spread repayments and maintain stability in public finances. The government has consolidated the fiscal deficit through multiple measures, saving 5.6 billion rupees in interest costs through bond switches and conversions, shifting subsidies from blanket schemes to targeted direct benefit transfers, and sharply increasing capital expenditure investments that both stimulate growth and generate long-term revenue. Under PM Modi's leadership, capital expenditure on key infrastructure has risen nearly fivefold. Flagship initiatives are building productive assets that drive growth, strengthen the economic base, and expand future revenues, forming the foundation of a sustainable and resilient fiscal strategy. Abhimanyu Pawar for DD India.
All right, we are slipping into a very short break. On the other side, more stories. Keep watching DD India News Hour.